Good evening, everyone. Myself, Shital Shah, Secretary, ANMI Western Region. Welcome our guest speakers and our members. We take this opportunity to thank you all for joining us for today's webinar. We thank IFSCA and NSE IX for their constant support and hosting today's webinar. So today we have with us Mr. Shubham Goyal, AGM, Department of Capital Markets, IFSCA, Mr. Mehta Pandya, Head Business and Product Development, NSEIX, Mr. Vaibhav Shah, Director, ANMI National Council and Chair Gift City Committee, NMI, Mr. Harin Mehta, Chairman, ANMI WIRC, Mr. Arjun Shah, Vice Chair, ANMI WIRC. We take this opportunity to welcoming all and our members. Now I would request Mr. Harin Mehta, Chairman, to give welcome remarks.
Good evening, dear friends and dear investors as well. So ISCO comes up every year with 1 week as an investor week. They want to address two critical issues. One is investor education and another is investor protection. Today we at ANMI Western Region would like to welcome Shri Shubham Goyal ji, AGM IFSCA, Shri Mehta Pandya ji, Head Business Development NSEIX. And let me welcome our own Sri Vaibhav Shah ji, Director NME and Chairman Gift City Committee, under whose directions we have been leading today's webinar. And also welcoming our own Sri Arjun Shah ji, Vice Chairman NME WR. Today we will be learning and looking forward for a positive interaction from IFSCA and NSEIX for benefiting. How can the investors benefit? And under their guidance, we will also learn that how can investors be protected as well. Over to you, Shital.
Thank you, Harin sir. Now I would like to welcome Mr. Vaibhav Shah for introductory remarks.
Yeah. Good evening to our guest speakers and my dear friends. As you all know, today we are conducting webinar with IFSCA and NSEIX on the celebration of World Investor Week 2024. It is my privilege to deliver introductory remarks. One must definitely agree that the IFSCA and NSEIX is the bridge for Indian and global investors. It opens gateway for international investors to participate in the Indian stock market and simultaneously increase the liquidity in the market by bringing in new capital and players. I request our all NME members to look into the developments and opportunities lying in NSEIX GIFT City. I would say it is a strategic initiative that reduces the gap between the Indian and international financial markets. It offers unique advantages for investors seeking exposure to Indian equities and establishing a prominent international financial hub. Thanks IFSCA and NSEIX for associating with the NME for today's webinar. Now I would request the next speaker to take the session forward. Thank you.
Yeah, Mr. Shubham ji.
Yeah, so basically, I think the starting which was said about the ISCO World Investor Week. So I'll just tell you about the brief background about this thing. So like you all know that ISCO is basically a global international bodies where all the securities market regulators are the members. So around 180 members are already there. And IFSCA, which was constituted in 2020, is also becoming an associate member of the ISCO. Also, IFSCA has signed the ISCO MMOU, that is this multilateral memorandum of understanding, and also the EMMOU, that is enhanced MMOU. So IFSCA has become the signatory to these two initiatives of ISCO, which are basically the information sharing platforms amongst the regulators in last 3 years. This World Investor Week, this is something which is an initiative of ISCO for education and protection of investors. For this year's World Investor Week, the theme is basically technology, sustainable finance, and digital finance. SEBI, which is the domestic regulator, as you all know. So that is the national coordinator for this. Generally, the World Investor Week time was this 9th to 13th of October. But because this is a week where we do celebrate Durga Puja and all, so India is celebrating this World Investor Week, which from 14th to 20th of October. already at NSEIX, there was a opening ceremony of World Investor Week, a ring bell ceremony, which has been done by our ED, Shripati Ramakrishnan. And this is how this for 5 days there will be multiple programs which will be there for the education of investors, for the protection of them, about sustainable finance, technology, gift IFSC, the products which are available there. So to give a overview about the gift and other things. So in this presentation, I would specifically cover about the capital markets ecosystem. I will first give a brief overview about the gift IFSC, what this gift IFSC is and what the role of IFSCA, and the kind of other things which are the other products, and a specific initiative at this point of time which has been there for gift IFSC in terms of direct listing, which has been announced last year in July 2023. So Arth, I will just request you if you can move the slides for me, so it will be very helpful. Yeah. So this is the structure of the gift city, as you can see. So basically the gift city, which is there in, all of you know that is in the western part of India, situated in the Gujarat, around 30 kilometers away from the Ahmedabad. So basically it's the smart city which is developed in 2008. It is divided into the two zones, especially this is one was the DTA, which is the domestic tariff area. So domestic tariff area, all the kind of rules and regulations which are applicable in the domestic India, all are applicable there. There are some of the benefits which are available there in terms of the social infrastructure, in terms of some benefits which has been given by the state governments, some benefits which have been given under the ITES policy for some IT companies. If you visit the gift city, you can see some of the good IT companies having their offices in the gift city. In terms of even Google is also having the office. You can see IBM, you can see TCS. All these companies are having the offices in the gift city. IFSCA, when we say about the IFSCA, then there's another zone in the gift city that is a special economic zone. That is a first financial special economic zone, which is called as International Financial Services Center. So I'll just tell you something about the genesis of this IFSC. So there was a committee and that committee has submitted a report somewhere in 2006-7 about the Percy Mistry committee, when they had said that there should be something called as offshore financial center in India, that is IFSC. And our prime minister, who had visited at some point of time in Singapore, so he had envisioned about this IFSC. So in 2014, when the then chief minister of Gujarat became the honorable prime minister, in 2015, this IFSC concept came into the picture. From 2015 to 2019, this special economic zone, it is around 250 acres in the gift city. This was being regulated by all the 4 domestic regulators. This was an offshore zone. Basically, the entities which are there in this gift IFSC, they are considered as persons resident outside India from the purpose of FEMA, but it was being regulated by all the 4 domestic regulators: RBI, SEBI, PFRD, and IRDA. So next slide, Arth, please. So in 2019, IFSC Act was passed. So this was basically an International Financial Services Centers Authority. This was kind of on a similar lines like MAS is there in Singapore. You can see MAS, which is Monetary Authority of Singapore. So that is a unified regulator. So MAS is the central bank. They are the banking regulator. They are the securities market regulators as well. So MAS governs the whole regulatory system in Singapore. The another example which we can see, I think FSA Japan. So these are the kind of unified regulators which we can see around the world. So to regulate this 250 acres in the gift city, not the India, this concept of unified regulator came into the picture. So this regulator was entrusted with the responsibilities to regulate the financial products, financial services, and financial institutions. And since 1st of October 2020, the powers of all the domestic regulators, there are 14 acts which are there in the IFSC Act Schedule 1. So the powers which are there with the domestic regulators in those acts, the power was entrusted to IFSC. For example, there are some powers in SEBI Act. So SEBI can do the enforcement and all those things in the securities market. So whatever the SEBI can do in the domestic market for the purpose of enforcement, those powers has been entrusted to IFSCA since October 1st, 2020. The next slide. So this is about the jurisdictional comparison. So like I told that this is an offshore financial center. In this offshore financial center, the entities which are having their presence, they are considered as persons resident outside India. So it's a kind of international jurisdiction. If I tell you something similar, so then you can say like Dubai International Financial Center, which is there in Dubai. So the regulator is DFSA there, and SC is the regulator in the domestic jurisdiction. So something on those lines, this IFSC has also been created. Can you please see this slide? Arth, I'm not able to see. Yes. So about this jurisdictional comparison, if I tell you, the status of being non-resident is there only under the FEMA. You can see this FEMA. The rest of the world are considered as non-resident, and similar to the same, IFSC SEZ is also non-resident. But if we talk about in all other acts, like from income tax, so the entities which are there in the GIFT IFSC, they will be considered as resident entities only. So they do not get the benefit of being non-resident just by having their presence in the GIFT IFSC. So if you see in the Income Tax Act, there have been number of amendments which have been carried out by Government of India to give some preferential treatments to the entities which are there in the GIFT IFSC. As like you all know that there is a tax holiday in the GIFT IFSC, 10-year tax holiday. So it has come through amendment in one of the sections of Income Tax Act. So from income tax angle, from the Companies Act angle, and from the all other acts are applicable, just like those acts are applicable to a resident in India. So status of being non-resident is only under the FEMA, so that the capital controls doesn't apply in the GIFT IFSC, and the movement of capital from the GIFT IFSC to the foreign to GIFT IFSC is very smooth. Otherwise, all other acts are applicable. Next slide. So this is all about the regulatory architecture. IFSCA came in 2020. And after that, because we had to come out with our regulatory frameworks for different things. So we have come out with our around 29-30 regulations in those 3 to 4 years. We are regulating the banking sector. You can see some of the regulations for the banking. Then you can see regulations for the capital markets. We are having the regulations for market infrastructure institutions. Those are stock exchanges, clearing corporations, and depository. Then CMI regulation, that is for capital market intermediaries. Listing regulations. So we have come out with our new listing regulations recently, after the announcement which was made. So those listing regulations, we have benchmarked with the global best practices. So in capital markets, we are having those 3-4 regulations. Then there is a very good fund management ecosystem. So we are having more than 150 funds registered with us. And we are also regulating some of the products which are not being regulated in India, like fintechs. So we are having a framework for fintechs. We are having a framework for aircraft leasing, and so on. So number of frameworks which are there in this jurisdiction, and in the short period of 3 years. And one of the most important thing which I will just want to highlight, this AML CFT guidelines. If you'll see those AML CFT guidelines, these were drafted around 1.5 years ago. These guidelines provide a very good overview about the KYC, about the due diligence which the entities have to do. These guidelines have also been prepared considering the global best practices. The next slide, please. So this is just overview of the business highlights. So within a period of 3-4 years, we have reached to around 700 entities in the GIFT IFSC. The monthly turnover on the IFSC exchanges is around more than 100 billion. Like I think you would have seen some press releases and some media releases from NSE IX that they had around $100 billion of turnover in September 2024 in Nifty derivatives only. So the derivatives market is quite liquid here. It's quite robust. Then you can see the banking asset size. Bond market is also very good here. So around $60 billion of bonds have been issued on the GIFT IFSC exchanges. Out of that, around $13 billion of bonds are the ESG labeled. So bond framework is there, derivatives framework is there on the stock exchanges. Equity has also been announced. So now we can see a number of products which are available for trading for the non-resident investors, and also for the resident investors to trade on the stock exchanges in IFSC. Additionally, you can see that corpus size of alternative investment funds and the derivative transactions of this, which has been booked by the banks in terms of non-deliverable forwards. The next slide. Next slide, please. So these are the key entities which are there in the GIFT IFSC. You can see in terms of banking, there are around more than 10 global banks. All the HSBC, Citibank, and all those banks are having their presence. ANZ is the latest one, and from Australia and New Zealand. Then the funds industry, you can see RDA and all those big guys. From ancillary service providers. So this is also one of the new initiatives. We are having something called as ancillary service provider, where all these law firms and CA can set up their offices to provide their services to the non-residents and to the entities which are there in the GIFT IFSC. Then you can see some of the tech entities which are there in the domestic India. So this is just about a brief overview, the kind of reputed entities which are there in the GIFT IFSC. The next slide. So this is about this comparative tax regime, so which everyone talks about the GIFT IFSC. So there is a tax holiday about 10 out of 15 years consecutively under Section 80 of Income Tax Act for the business income. Then MAT is also applicable with a reduced rate, that is applicable only at the rate of 9% in comparison to what is there in India of approximately of 18%. Additionally, if you opt for the new tax regime, then MET applicability is also not there. Then some advantage in terms of capital gains tax for the non-resident investors, not applicability of STT and CTT, and some tax regime for the funds. So for the first, there is a specified fund tax regime under Section 10, subsection 4D of Income Tax Act, where you get all the income taxable, all the incomes are taxable at the level of funds. So you get the advantage of exemption from PAN and return filings. So these are some of the very good tax advantages which is there in the GIFT IFSC. We have tried to put GIFT IFSC in comparison to the global financial centers, the tax advantages which are available to the Singapore and Hong Kong. So the government has made its best effort that all kind of tax advantage can be extended to the GIFT IFSC. Next slide, please. So this is now I'll try to go to the capital markets ecosystem. So I'm not covering all the verticals due to paucity of times. So I'm just directly going to the capital markets ecosystem, which is there in the GIFT IFSC. Next slide. So this is all about MIs and intermediaries. So we are having two stock exchanges, two clearing corporations, and one depository. So two stock exchanges, like one of those is NSEIL and another is India INX. So this NSE International Exchange is a subsidiary of National Stock Exchanges of India. Similarly, India INX is a subsidiary of the Bombay Stock Exchanges of India. And both the stock exchanges are having their two clearing corporations and one depository, which is actually a kind of subsidiary of all those 5 MIs in India. This BSE, NSE, MCX, NSDL, and CDSL. All of them are having the stakes here. In terms of broker, we are having 82 broker dealers registered at this point of time. We are having 22 clearing members and 10 depository participants. So overall, we are having more than 125 capital market intermediaries. You must have heard that KRH Global also has set up their office. So KR Ratings has also set up their office recently. They are also doing their rating business from GIFT IFSC. They have done the sovereign ratings of some of the countries, and they had a function here in the GIFT IFSC on 3rd of October, in which they presented the ratings of all the countries which they have done till now. Next slide. So this is about the products which are available on the IFSC stock exchanges. So like I told, majorly the derivative products which are available and the bonds. So like equity announcement has come the last year, and some enablers has been given by the government of India in January. Then IFSCA has come with our listing regulations, and now we are going to see equity listing very soon on the GIFT IFSC exchanges. At this point of time, derivatives are there in terms of index derivatives, currency derivatives, commodity derivatives. In terms of bonds, we are having a quite good market where we have around 60 billions of dollars, which has been listed on the GIFT IFSC exchanges. Next slide, please. So this is something about this global market access. So because GIFT IFSC has been envisaged as a gateway to access the global market. So for the resident investors, there is something called as NSE IFSC receipts. So basically, these are the unsponsored depository receipts on US stocks. So there are top 50 US stocks which are available on the NSEIX for the trading for the resident investors under the LRS route. So under the LRS route, around 250,000 of US dollar can be remitted outside the country for the purpose of investments. So residents can invest through LRS route under these NSEIFSC receipts. Non-residents also can invest in this products. The people who are actually interested to get the exposure of US markets. These are being traded on the regulated platform of NSEIX and being cleared through the clearing corporation. The similar product is available through other exchange, which is India INX. So they have set up their subsidiary in terms of India INX Global Access. So they are having some tie-ups with the international brokers, which can facilitate to trade on the global exchanges. In this, so many resident people can participate, resident institutions. So if they want to have the exposure, then in that case, India INX Global Access, it works as a kind of introducing broker, and they connect with the international brokers. Next slide. So this is about this recent initiative about the direct listing. So like in the last year, in July 2023, Honorable Finance Minister had announced about the permitting this Indian companies to enable their listing on the international exchanges. So it was announced in July 2023. I'll just give you a brief background about how it started and what we are and where we are at this point of time. Next slide, please. So this is where it started. In December 2018, there was an expert committee which was constituted by SEBI, and this expert committee had submitted its recommendation that Indian companies should be permitted to list outside India. Accordingly, the amendments were carried out in the Companies Act, section 23(3) and 23(4), where the amendments were made that the Indian company should be enabled to list on the international exchanges. But these, you can see the amendments were made in September 2020, but these amendments were started only in October 2023, when these sections were commenced after the announcement of Honorable Finance Minister. Subsequently, so we had noticed that we need to have our regulations, which needs to be benchmarked with the global best practices, because we were having our regulations which we had issued in 2020-21, but there was a demand from the issuers that these regulations need to be benchmarked with the global jurisdictions. The regulations need to be a bit more light touch, because if you see the SEBI regulations, so SEBI is having the regulations in terms of ICDR and LODR. SEBI ICDR and LODR regulations, if you will see, so both those regulations will become around 600 pages if we combine all those regulations. Here in, I think in 56 pages, we have issued our ICDR plus LODR. So the requirements are more on the principle based rather than going in detail in each and everything. So you can see that government enabled in January 2024 about this direct listing by making the amendments in the NDI rules. They also notified the LEAP rules. And after that, we have also come out our new robust listing regulations, so which enable these companies to come on the international exchanges and to raise capital. Next slide, please. So this is about the regulatory framework of direct listing. FEM NDA amendments in 2024 and these LEAP rules. So both of have come in January 2020-24. And government also issued some of the FAQs in terms of advantages which are there for the issuers and investors. And IFSC has our listing regulations. Next slide, please. So this is all about our listing regulations. We do cover IPOs, FPOs, secondary listing, listing of DRs, listing of debt securities, and listing of some other financial products. So recently we have come out with our consultation paper of listing of CPs and CDs. So that circular is also going to come out in public domain very soon. So we are also having the regulatory framework for listing of CPs and CDs. Next slide, please. So some key features of listing regulations. So in terms of eligibility criteria, you can see that we are having three kind of tests. So if you can see these three kind of tests, especially about the market capitalization. This is something which was not there in our old listing regulations. We could see that Singapore, Hong Kong, and some other global jurisdictions does have this market capitalization criteria. So even if you are not meeting the profit criteria or the revenue criteria, you can list if you are fulfilling this market capitalization criteria. So you can see either you have to fulfill the revenue test or the profit test or the market capitalization test. So if you fulfill either of those criteria, then you can list on the international exchanges in the GIFT. So you can see some of the startups, they might not be profitable, but they can have the post-issue market capitalization of usually 25 million, which is around 200 crores of rupees. So they can come and they can list on the international exchanges. For this offer document and all, so we have said if your offer size is quite less, then you don't need to come to IFSC for observations. You can just go to the exchanges, or exchanges can give you their comments and you can revise your offer document accordingly and can list if your offer size is less than $50 million. Next slide. Then in terms of minimum public shareholding requirement, because this is something which these issuers do always see. So for the Indian issuers, now if you can see, there has been amendment in the Securities Contract Regulations Rules, SCRR. So for the companies which are going to be listed on the GIFT IFSC exchanges, the MPS requirement has been reduced to 10%. What has been there 25% in the domestic India. So this is something which we had got it done because some of the promoters which might not want to dilute more. So for enabling those kind of promoters, we have got this amendment done from the government. And for foreign companies in our regulations, we have prescribed a dilution of 10%. So MPS, which is there 25% in India, in IFSC, this has been kept at 10%. Underwriting also, we have not made it mandatory because it does involve some kind of cost. So this is upon the issuer whether they want to underwrite or not. Next slide. About the monitoring agency, so I think in domestic, you all are aware that if the issue size is more than 100 crores, then you need to have mandatory monitoring agencies in form of a CRA. So here we have kept this requirement as an optional because again, it involves some kind of cost and there might be some kind of institutional investors who might not be much concerned about having a monitoring agency and they might have faith in the issuer. So if the issuer and the investors are comfortable, they can do away with the requirement of monitoring agency as well. So it has also been kept optional. In terms of lock-in period, like you can see, there has been some very stringent requirement in the domestic regulations on the promoters and all. So even the concept of promoters and promoters group is not there for the foreign companies, and even for the Indian companies, we have linked it with the Companies Act definition, and the lock-in requirement has been kept only for the 6 months from the date of allotment for the pre-issue shareholders. Next slide. So these are some of the advantages which are there for the issuers. So the Indian issuers who want to come and want to list on the international exchanges, they can have an expanded investor base. They can access to the all over the whole world, because there are no capital controls. If in India, if those investors have to come, they have to come through the FPI route. Here there is no registration of FPI, so the foreign investors, they can directly come. They can buy their shares. So companies will get the advantages of having a very big investor base. They can go to the various jurisdictions. Visibility will increase. They can expand their reach to maximum investors. Next slide. So this is majorly about the benefits to investors. Sometimes the question comes if there are Indian companies, if their shares can be traded on the stock exchange in domestic India, where the market is very liquid and companies are getting very good valuation, then why should they come to the GIFT? So here are some of the reasons. Because the foreign investors, when they will be investing in the domestic exchanges, then there will be the currency risk which is applicable to the investors. Here, because the trading is being done in the US dollars, so there is no foreign currency trading risk. They can get the advantage of trading in the US dollars. The markets are open there for more than 20 hours in a day. So I think NSE IX operates for around 21 hours, and the other exchange, India NXS, operates for more than 22 hours in a day. So you can take the advantages of the fluctuations which are there in the global world. So you can see if there is some global event which is happening and they want to take the advantage of this. So that can be done on this IFSC exchanges, because in India, the markets are open only for 5.5 hours. And in terms of tax benefits, yeah, there is no capital gains tax for the non-residents, no STT, no CTT for anybody else as well. Next slide. So this is about some kind of benefits for the foreign companies. So for the Indian companies, this is one of the most important points, I think. So if the Indian companies are listing on the IFSC exchanges and then there is no participation of the residents. So the residents cannot participate if the beneficial owner is resident or the entity itself is a resident. They cannot participate in the listing of Indian companies on the IFSC exchanges. So for the Indian companies, only the option of the non-resident investor is open. But for the foreign companies, the residents also can participate. Resident individuals can participate in the LRS route. So they can participate. Even domestic mutual funds can also participate if the foreign companies are listing on the IFSC exchanges. So we note, I think, the unicorns which are there in the GIFT in India. So the holding company of those unicorns are there in the global jurisdictions. So those companies are the foreign companies. So those foreign companies can come and list on the GIFT IFSC exchanges. So this is something which we are thinking that some of the, like we are talking about those flipping of those startups which are there. So if those can come and list and they can raise the capital to the listing route, so that is something which can be a good success for the GIFT IFSC. So this is all from my side. So I've just tried to cover the primary and secondary markets which are there for the in the GIFT IFSC, and because due to paucity of time, I will not be able to cover more. But you can see on the IFSC website there are some kinds of web pages for the different verticals. So for the relevant documents and materials, you can access those web pages on the IFSC website, and you can come to know about number of things on the website. You can see number of consultation papers. Recently, also we have come out with a consultation paper on investor protection, how to handle the complaints and all. So all those things can be accessed from the IFSC website. So that's all from my side.
Thank you, Shubham ji, for insightful presentation on GIFT City. Now I would like to invite Mr. Meet Pandya from NSE IX.
Thank you, Shital. If you can just run the slides for NSE IX, please. Thank you, Shital. If you can just zoom in and probably start with the second. Yeah, perfect. Thank you. So NSE IX in GIFT IFSC is a 100% subsidiary of NSE India. And we have been present in GIFT IFSC since 2017. And if you can move further, Shital, the third slide, please. So our exchange was inaugurated, by the Prime Minister, and we started the since 2017 we started the operations live, and this is the only exchange where it's single platform, multiple products. Unlike India, where there is segment for each product, out here we have envisaged. Sheetal, if we can move to the second slide, please. So we've got multi-product single platform, as I was mentioning. So we have all the futures and option derivatives on all the indices that are available in India. So our flagship product out here is the GIFT Nifty. I'll dive deeper into that in the following slides. But in terms of the equity indices, we have all the equity indices that are available in India. So it is the GIFT Nifty, which is the Nifty 50s futures and options out here. We've got the Bank Nifty. We've got the Fin Nifty, IT Nifty, Nifty Mid Cap, and Nifty 50 Select. So that's in the indices. We've got the single stock futures. We've got all the single stock futures which are available in India, 182 single stock futures. And on the currencies, we've got the currency pairs, the INR USD being one of the most active, and then the other cross currency pairs. We've got the depository receipts, the debt markets, and equity listing, as Shubhamji kind of mentioned. That's a very new progressive, uh, outline that we have got from our regulator IFSCA for new equity listings on our exchange. That's on the inbound side. On the outbound access is we give access to global stocks, global 50 stocks to start with, US stocks from Netflix, Tesla, Google. If you are looking to kind of invest in those stocks, and I'll kind of dive deeper into the product suite in the following slides. So in terms of what is it out there for investors like yourself, is that it's like a one-stop shop if you want to kind of trade inbound access into GIFT IFSC exchange and NSE IX, as well as outbound access. Sheetal, if you can kind of take it to the next slide. The benefits at GIFT IFSC is at par with any other global IFSC in terms of no stamp duty, no commodities tax, no capital gains. And what does this entail, right? For an investor, how do you kind of figure out what is the benefit for you? So, for example, in India, if you're trading per crore, if you're trading, you pay about 2,300 rupees on futures. Out here, with all the transaction costs for the same 1 crore value, you're paying about $1, which is about 85 rupees. So you are kind of trading at 96.5% lower trading costs. The other benefit is that all the products at GIFT IFSC and NSE IX are all dollar settled. So the risk of the currency also kind of goes away for investors who are looking to invest on products listed with us. The right hand side, I will kind of not focus too much into that because that's for entities setting up out here. But for the investor, I think that doesn't apply. And if you can go to the slide number 8. As I was mentioning, that NSE IX and SGX Gift Connect went live last year in 2023, and our flagship product is GIFT Nifty. And some of the numbers I wanted to kind of share in terms of the volumes. So I'm sure investors who are not aware, we are 2x the volumes that happens on NSE India. We are about on an average, we trade about 4.5 billion to $5 billion per day on average daily turnover. We've hit in the month of September and October, we've crossed $100 billion of monthly turnover. And an open interest, we are at about 3x the open interest of what is out there in India. In India, it's about $5 billion of open interest. We have about close to 20 billion of open interest. So in terms of the depth of the market, in terms of the liquidity in the market, at least this particular product of ours is much more it's got liquidity. The other products suite that I'm talking about, the Bank Nifty, the INR USD, those are being kind of developed out here, as well as the options. And an interesting point that I want to bring out here as part of this particular call is also the weekly options. So we've got 5 weekly options out here. So they were always available out here. So Nifty, Bank Nifty, we've got the Fin Nifty, Mid Cap Select, and the Nifty Next 50. So all those products are available out here on our exchange. Shital, if you can go to the second slide, please. This slide is basically kind of talking about what I covered initially. So we crossed $20.84 billion of total OI in the month of September. That was the highest OI that we have had. Last month it was 18.3. That was another record high. And this kind of goes to kind of show the interest from global participants as well as NRIs, corporates out of India who are looking to kind of access the gift infrastructure. Next slide, Shita. This particular slide will kind of show you the representation that of the $100 billion of average monthly turnover that we do at NSEIX, we are doing 100 billion. Our parent exchange is doing about $52 billion. So we are at a 65% market share, and that number has been consistently between 60 and 65%. So this gives you an idea in terms of the volume, the liquidity, and the depth which is coming at NSEIX, especially at GIFT IFSC. In terms of the other, next slide, please. One of the game changer, I would want to kind of specifically mention and give credit to our regulator, IFSCA. They have been one of the most progressive regulators that I have come across in the recent past. And in terms of groundbreaking new initiatives that they have kind of incorporated, especially at GIFT IFSC, and one of them is the remote trading participant program. So remote trading participant program is a program which allows, so earlier if anybody had wanted to trade any of the uh, products on NSEIX, they had to particularly be physically present at GIFT IFSC. They had to have infrastructure set up, people on the ground. With remote trading participant, that has been done away with. You can be trading from anywhere, anytime, as long as number one, you are a member of one of the 17 exchanges, which is listed on the right hand side. So from the US, you've got the NYSE, NASDAQ, CME, ICE. Out of Dubai, we've got the Dubai Gold and Commodities Exchange, which is a DGCX, ADX, DFM, NASDAQ, Dubai. Out of Netherlands is Euronext. So there's about 11 countries, 17 exchanges. So if you are a member of one of these exchanges and you're coming in as a as a prop money, not client money. And number three, you need to have a local clearing member, and you are a non-Indian entity out of India. So it has to be a foreign entity. It's a plug and play model, which IFSCA has enabled NSEIX or the exchanges out here with, that you can straight away come and trade with us. And that is something which has allowed large prop trading firms who were not able to kind of access this particular market, who were coming through another partner exchange, are now directly coming to us. So this is something which has been kind of the flavor for the last quarter. And if you take the next slide, why RTP is kind of gaining interest from international participant is that no physical setup, as I mentioned, ease of access and quicker registration. We have been able to onboard clients in as many as kind of 18 business days, and the fastest that we have onboarded is about 5 business days. The lower transaction cost, as I mentioned, if you're trading in India onshore, you're trading we are at 96.5% cheaper. Also, when you're trading the same product through another partner exchange, you are going through a global clearing member. And when you're going with a local clearing member out here at GIFT IFSC, that kind of gives you a saving of another 55 to 60%. So overall, your trading costs are coming to a fraction. One of the biggest benefit is also no currency risk, right? As I mentioned, all the products out here are actually traded in dollars. So there's no need of moving money into India, converting that, hedging those costs. It's a straightforward, you plug and play trade out here in dollars and move your money back into dollars. And the other important benefit is the longer trading hours. In terms of, we are the only market which are trading 21 and a half hours. So we kind of, crisscross the markets from US to Australia. We start in the morning at 6:15 a.m. Our first session ends at 4:15 in the evening. Another session
Meet, are you there?
Not able to hear him.
Some connectivity issue, I think.
Mm.
Mr. Meet is joining back in a minute. Due to some connectivity issue, there was. Meet,
Yeah,
you want me to run presentation?
Yeah, if you can just run the presentation. I think you were on the second slide after RTP. Yeah, apologies for that to everyone. I think I got disconnected. So I think the registration process I've already covered while I was speaking earlier. If you can just move to the second slide, please. So this is one of the outside access, the outbound access that I was referring to of global stocks. So while members, like I think Indian investors are looking to invest overseas through other avenues that are there under the LRS scheme through broker members who are in the US, NSEIX actually provides a very unique product for our investors or kind of end users who are looking to invest into global stocks. What this particular product is actually, it is the unsponsored deposited receipts. So we buy these whenever the investors are able to buy these stocks in a fractional ownership from $10 to $20 value. And for example, if a Tesla is a $300, we make it into a $10 unit. So you have to buy 30 units to buy one share of Tesla. I'm just giving you an example. Those shares are actually bought in the US through our global custodian, which is Deutsche Bank. They converted into fractional shares at HDFC Bank, which is our local custodian. And those shares are actually residing in the customer's demat account. So this is a very unique proposition that is available because when you're buying through a foreign broker, those stocks are not in your own demat within the country. Out here, you are getting an opportunity to hold those shares within your demat and you can buy and sell. So this has seen interest in the past 4 months. We have seen about 32,000 new UCC accounts being opened at GIFT IFSC. Prior to April 2024, there were about 3,500 UCCs which were there. Just in the last 6 months, we have been able to add about close to 30,000 to 33,000 plus UCCs. And this is where the Indian investor is able to invest into global stocks via the LRS route while holding those stocks in their demat account at GIFT IFSC. So there are our broker members who are allowing their end clients to access this product of our exchange through their platform. Uh, that's the overall proposition of NSEIX, the opportunities out here, the products out here. Happy to take any questions if the team has any question for me. Thank you so much.
Thank you, Meet, for insightful presentation. Members can reach out to Mr. Meet if they have any queries. Now I
Actually,
would
Meet,
like
I
to
have wait, Shital. I have one or two questions. Meet,
yes, Harin.
what is the LRS limit currently?
Sure. So the LRS limit is per person per financial year $250,000.
Okay, so is the LRS limit applicable to corporates also, or they can have more unrestricted access to the city?
A very good question, Mr. Harin. So number one, the LRS route for individual investors is $250,000. And
Hmm.
for corporates who are wanting to set up an entity out here, then they can bring in 4x of their corporate net worth out of India over here to set up the entity. Correct. And then once they have the money out here, then they can invest on our exchange or they can invest into global markets while being at GIFT IFSC.
Okay, so if I have a customer who is willing to invest directly into Google stock, so as a through a broker in Gift City, he can do that. He doesn't have to actually go physically to US and do it.
Correct. So absolutely. So they just on our exchange website, nscix.com. If you go under resources under membership, you'll see the list of members that we have, and from them we have about close to 8 to 9 of them who are actively offering this US global stocks. The rest of them are also members with us, so that you can reach out to them and they will be able to kind of, give you the access to invest into global stocks. The benefit, the pros and the cons, right? When you are going with the US broker dealer, right? When you're going through US broker dealer, there is no regulator or in India who's actually looking at that particular thing, right? Whereas with NSEIX, we are regulated by IFSCA, and those shares are actually in the demat. Whereas when you're going overseas above $500,000, it's only FDIC which covers up to $500,000. Beyond that investment, it's not insured, right?
Okay.
And that's where, Harin bhai, that we have been able to kind of see this interest, that there were investors who are investing, upwards of $500,000 in the US stocks. And when they realize that, in case if a mishap happens with a global broker out there, they have no recourse to that. Whereas when they are going through the regulated exchange mechanism, the shares are lying with the depository within their demat out here, and they can buy, they can sell. Everything is happening through the member broker of ours within the regulated regime out here under IFSCA.
Okay. So another question will be to Shubham ji. Is there anything where uh, Indian investor can invest into GIFT City direct listed of stocks?
So basically, if the foreign companies are going to list on the IFSC exchanges, like I was talking about these unicorns, so all those unicorns are
Yeah,
having their holding company outside India. So the companies are there
correct.
in Seattle, Singapore. So those companies do come here, and if they list, then the residents can invest under this LRS route. So then they are having this limit of $250,000. The companies will get the benefit that even domestic mutual funds can also invest. But again, for that mutual funds, that limit of $7 billion is there, which is kind of breached now. So we have requested the government that if a separate limit can also be provided to the GIFT IFSC for the foreign companies
Yeah.
and in which domestic mutual funds can participate, that will be good. But again, these are the proposals under considerations. Nothing has been.
That is okay, but still it is under consideration is a good hope for us also.
Yes, yes, exactly. So
Yeah.
basically, what we are trying that we should create a good ecosystem for these foreign companies, and for the unlisted Indian companies, we are trying a lot. For the listed
Mhm.
companies, we are actually in discussion with SEBI.
No, that is okay, but even unlisted companies can get listed directly to NSEIX. But can the Indian investor invest in that company then?
No. So again, this is again an ask which we
Ah,
the government. So again, that's why I said that foreign companies they can invest, but not in the Indian companies, because this
okay.
is something which government considers it will be a kind of arbitrage from the domestic jurisdiction. The reason being here, so many benefits are available. For example, even still, if you see for the FPIs, if they are investing in an Indian company in India, they are not going to get the capital gains tax benefit. But if the same securities are going to be traded on the GIFT IFSC exchanges, they are going to get the capital gains tax benefit. Again, the stock exchanges here are open for 22 hours. The foreign currency is there. So again, number of advantages are there at this point of time. So the government has not, government doesn't want to create this arbitrage for the resident Indians. But again, this is something which is
So,
requesting to the government, at least for the unlisted companies, because the unlisted companies, they are not listed in India. So the opportunity should be given to them to invest in those companies on in the IFSC.
wonderful.
Yes, yes.
Thank you. Yeah, Shital.
Thank you, Meet ji and Shubham ji and Harin ji. Now I would like to call Mr. Arjun Shah, Vice Chair of ANMI WIRC, to give vote of thanks.
We extend our sincere gratitude to our esteemed guest speakers, Mr. Shubham of IFSCA and Mr. Meet of NSEIX, for their presentation on the structure, ecosystem, and the different products available at NSEIX, both domestic and international. We also thank our colleagues, Vaibhav and Harin for their valuable contributions. We appreciate the time and the effort that our members today have joined us, and we hope that the webinar has provided valuable insights. Please feel free to contact the NSEIX team for any questions. The recording of this webinar is, of course, available on the ANMI YouTube channel. Thank you and have a wonderful day.
Thank you, Arjun. Thank you.
Thank
Thank
you
you,
all.
everyone, for joining us
Thank
today.
you.
Thank you,
Thank you.
Vaibhav. Thank you, everyone.
Thank you.